Thanks for joining us, everybody. My name is Isaac Roth, and I'm a partner here at Shasta Ventures. And I'm here with two of my colleagues at Shasta, Ravi Mohan, general partner and founder, and Michael Locke, an advisor to the firm, who's been helping many of our portfolio companies before and through this economic time of volatility. The coronavirus has certainly led our companies into unprecedented times. And while those of us on this call have lived through other major downturns in the economy, we have never seen something like exactly this. At Shasta, we're committed to helping our portfolio companies through these more difficult times and want to spread our knowledge throughout the greater venture ecosystem. We recently held a town hall of our leading CEOs to discuss issues that these times bring about. And we've also been publishing a series of blog posts that you can find on our blog on Medium, which is under Shasta VC. So please check those out. Today's session is one of the 4 sessions we're doing to address unique challenges brought on by the severe demand shock that we are facing. In this session, we're going to address one of the most pressing challenges, which is managing customers and potentially higher churn rates, predicting what churn is going to be for planning purposes, and things we can do to maybe help prevent so much churn. So Ravi and Michael, welcome to our Zoom cast.
Thanks, Isaac.
Yeah, please introduce yourself just so everybody knows your background.
So myself, I'm an investor. I've been in the venture capital business for 24 years. I've been focused on investing and assisting companies who build products and services that other companies buy. So what's called B2B. Started off with enterprise license software and transitioned now to subscription software. And I've invested across all areas from infrastructure all the way up to applications. I've been fortunate enough to have some good wins, including Anaplan. And that's given me perspective as to how to start a company and the challenges all the way to getting a company to multi-hundred millions of dollars of recurring revenue.
Great. I'm not an investor, I'm an operator. Although I play an investor sometime now with Shasta, but I've spent 25 years in the business on the operation side, mostly on the customer side. And by that, I mean sales, marketing, and now what we call customer success. We used to call it support, business development. People know me best in the Valley for Google Apps G Suite. That's a product that 2 of my buddies and I started that grew to $1 billion. So, and I'm excited to be helping all the Shasta companies in the portfolio today.
Great, thanks. I'm kind of in the middle. I used to be an entrepreneur. I'm now working as an investor. I started 2 companies that were successful in the enterprise software space, infrastructure, which were sold to Red Hat and IBM. The first thing I wanted to...
Oh, Isaac, you should mention that both of them were backed by Shasta.
Both of them backed by Shasta, and here I am.
And one thing, Isaac's a very humble person, but his very first company, Makara, was bought by Red Hat, and Isaac was the founding general manager of what's become Red Hat's OpenShift, arguably one of the most, or the most successful enterprise PaaS solution out there today.
Thanks, Ravi. I'm very proud of that. I like this product a lot. One of the things I wanted to start with here is, as people are thinking through all the things they have to do in this time that needs a lot of leadership, where should analyzing and managing churn fit on the priority list for executives at startups today?
Yeah.
It's
Ravi, you go first.
Go ahead. No, Michael, you go first. I'm always interrupting people.
All right. Okay. It's number 1. That's there. When you have the board meeting, the first board meeting after this demand shock, usually the churn and customer analytics slides are slide 17. Put it at slide 1. It's the most important thing you can do. Everybody will tell you it's a lot easier to keep a customer and to grow a customer than it is to get a new customer. And there's no doubt getting new customers in this environment is going to be even harder than normal. So it makes complete and total sense that this is the number 1 priority.
Yeah, I couldn't agree more. It's the number 1, number 2, number 3 priority in terms of your go-to-market activities. It's actually the only thing that you really, if you could only do one thing in your go-to-market activities in the next 3 months, it's next 3 to 6 months during this downturn, it's to focus on your customers. As a company, your 3 significant assets going into this crisis are your cash balance, and you're putting in place the right plans to manage that resource properly. Your people asset, and you want to manage them and motivate them and come out of this with great people. You want to invest in your products, but your customers are arguably as important as your cash and your people, maybe even more important. You can argue about it, but they're the top 3 things that you need to manage. And so this needs to be your 100% focus. You need to figure out how is your customer base affected by the environment, and then focus on how you can help them be successful. And by doing that, you're focusing on retaining your customers.
Okay, so Ravi, let's get into it then. If this is the most important thing, how do you do it?
Well, the first thing is you have to understand how much your customers are affected by the environment. So that's the first thing. And then the second, so you have an overall philosophy, you have to have an overall framework. Like, so if the obvious is, if your customers' industries are decimated by the customers of your customer are decimated by the current crisis, then you'll be in a very different place in terms of your actions than if your customers are affected like everybody else. So for example, there are going to be companies like Toast, which is a company very, very successful that sells into the restaurant vertical. If Toast is one of your customers, you have to understand that their business has been hurt dramatically. And so you need to understand that. And the way Michael talks about it, which I think is the best way to approach this, is to do a bottoms-up analysis of who are your customers, what businesses are they in, how big are they, and what's the likelihood, what are the problems they're facing, so one can decide upon the appropriate plans. So that's the analysis part, which is a bottoms-up analysis. I think you have an understanding as to what the industry, how the industry is getting impacted, but you need to do it bottoms up. And that wasn't very well said, I should say.
Okay, we've got the expert here that you're citing. So Michael, bottoms up analysis, does this mean you actually look at every single customer you have? If you have thousands or if you have hundreds, do you look at every single one and make a guess or analyze what might happen with them?
Yeah, that's what you do. And it's a bit different depending on what type of business you're in. If you're selling to larger companies and you have, tens to hundreds of customers, a bottom-up analysis, while time-consuming, is you can go through 100 or 150 line items. And I do recommend, if that's the type of business you have, and many of our portfolio companies are like that, you go through each account line by line. If you're in the mid-market and say you have 300, 400, 500 customers, I still recommend you go through it line by line. If you have 5,000 customers because you sell to SMB or to work groups, you tend to do that in, you put them in segments that are there. But essentially you have to take a data-driven approach to that bottoms-up analysis. And hopefully you've been doing that already. What you need to do in the downturn is you have to be better at it. You have to be more data-driven. And as Ravi said, there's 2 additional things that I put on the list here. So how is that customer or that customer segment affected by the downturn? And then secondly, how mission critical are you? Because some people are going to not be able to renew or not be able to renew at full price because they don't have any money, right? And other people are going to not renew because you're not important enough to them. You're not going to make the cut. So if you have that analysis, then you can start to take actions based off what you know. But that's, everybody should have some level of analysis. I encourage everybody to double down, triple down on it, and add those 2 additional attributes. If you're tracking every customer in Salesforce, then I would add those attributes to it, and be realistic. If you have an airline as a customer If you have restaurant chains as a customer, it's going to be hard to renew them, and it's going to be hard to renew them at the full price.
The one other attribute that people do track, but they need to double down on in their analysis, is the quality of their account map. And what that means is, whom do they know at their customer? Are you at the decision maker level with a good relationship, the person that owns the budget, or is your relationship primarily with the practitioner that's getting benefits from it, but not necessarily controlling the budget? Understanding the account map is critical in terms of being able to be creative and in terms of the actions you need down the line. So really doubling down on that part of the analysis, which in some cases is not emphasized as much.
Yeah, it's a good point. So if you're at the mid-level, often, if you're at a junior or mid-level, people at that level right now don't even know what their budgets are. Their bosses only know what their budgets are at this point. Now, pretty soon, next week, the week following, they're going to find out that their budgets have changed, and they're going to find out they are smaller and potentially much smaller. So if you're further down the chain, you have more work to do, and then you should be ready. Sometimes it's appropriate to be at that level. Be ready to arm them with the dollars and the ROI case about why you should continue this relationship, not just because we like them and we've always liked them stuff. You've got to be a lot more focused on the dollar and the justification side of your business, which we've got lazy at in the last few years because people bought easier and they renewed easier. And it's just way freaking harder now.
You get to that idea of things have been a little bit easier to sell recently. One of the things I noticed is as entrepreneurs, we're all really optimistic. And I think this is good. We wouldn't start companies if we weren't optimistic, because chances are they aren't going to make it. So we have to be optimistic. But this is a process here that's asking for a real reality check. How do I kind of coach myself or give myself tips or guide rails? If I'm talking to a customer or I'm looking at a customer in my list and saying, well, yeah, of course, my product's really essential to them. It's a huge, important part of their efficiency pipeline, or it manages this part of. How do I check whether that's really important to them?
Well, I think that you can check it in two different ways. And I think that one is empirical. So let's just take an example like Toast. Toast is a mission critical application for restaurants, right? It's sitting in there, collecting their payments, managing their business. But if the restaurants aren't doing any business, then just empirically, it's not important anymore right now until they get back into business again. If you're selling to Toast and they have a very successful business, so let's say Toast is using your software to power their go-to-market. When they were acquiring customers, that was super important, okay? And let's say that's what your software did. But now you know that they're probably not going to be acquiring that many more customers over the next 6 months until things get better. So you would have to say, wow, it was a mission critical application for Toast. That's why they bought it. That's why they retained it. But now it's not as important. And you can go down and you can, so I think that it's reconcilable that clearly people, even though it was easier to buy and easier to grow, people didn't buy software or software as a service just because it was there. They bought it because they had to supplement a real need. The big change that happened post the bubble in 2000 was that enterprises got better at buying software, and they actually put in systems into place to buy software, justify them, etc. This is in the enterprise space. Startups less so, but in the enterprise space, they definitely did. And so, it did have value. Otherwise, people wouldn't buy it. They wouldn't retain it. But the reason might have changed because the climate has changed. So that's the reality you need to take into place, or that's the mindset you need to have as an entrepreneur, that retains the optimistic mindset that you have, but lets you look at the business reality of today.
Yeah, and let me combine that. My answer would be, I would agree with what Ravi's saying, but on the other side of the business is that use data is how you do it. What I would say, Isaac. So you're probably doing, if you're listening to this, some level of product analytics. I mean, the beauty of SaaS is we can see what people are doing with our products. Back in the software days, we used to ship in the software. We didn't know how they used it, right? So we can go in and say, hey, what is our monthly active usage? What is our daily active usage? You know, that's there. Are they using all the features of the product? Are they using just this feature? Are they using that feature? So you can get and again, in good times, we've been lazy about product analytics. So our monthly actives are really good. Well, if your monthly actives are really good, but your daily actives suck, you're in trouble, because if they only use the product occasionally, you might be on the cut list.
So this is actually the opportunity that we have to scale the company. So one could look at the downturn like, and it's terrible. People are going out of work. It's hard to acquire new customers. But it's actually giving us and the portfolio companies within Shasta at the time and the space to be able to go do the things they need to do so that they can in the future scale efficiently, i.e. really understand what parts of the product are being used, really invest in the product analytics and look at what analytics are missing and start instrumenting it now when they have some space. Really instrument in and automate and build the tools as well as the systems to continually update your product, your account maps, and make sure that they're current. Go back into the our own database systems in our CRM and make sure we actually have the reason why people bought and what was the value they've received. Much of this information is sitting in people's emails, it's sitting in presentations, but it hasn't really been we haven't had the time to put it into a centralized customer information system, and more importantly, set up the systems and processes to keep it updated as we start acquiring new customers and get back into the growth phase. So the opportunity here is, while you're doing this analysis of your customer base, the health of the customer base, how your product is being used in the customer base, whom do you know at the customer, you can build the systems and processes in play to scale that over time so that it's not this manual process. So you'll always have it. And this can be one of the assets that a company can have coming out of the downturn that we have that will help them scale profitably.
Thanks. Michael, you mentioned a cut list and the idea that budgets probably will be shrinking for many businesses. In good times, for a world-class SaaS company, we target sort of 85 to 90% gross retention, 110%, 120% net retention. In this kind of environment, and based on your experience in past downturns, if people are going to have cut lists and reduce budgets, what should we be expecting or even hoping for in this kind of environment with, as a SaaS provider?
Sure. Yeah. I think it's variable and dependent, which is kind of a lousy answer. But let me start with this. It's going to be lower. So think about it. Everybody listening to this is pretty smart. When you set your budget this year for how much retention is there going to be, how much churn is there going to be, you looked at data from 2019 and 2018 if you're good, right? So we're not in 2019 or 2018, much more difficult environment. So it's going to be lower. Now here's some guidelines. If when you're doing this bottoms up, well, first of all, a guideline. If you sell to small businesses, your churn rate, which is always a bit higher, will be more effective, right? So small. When I went through this with Google Apps in 2000 and 2008, I mean, a big chunk of our business came on credit cards. So credit cards just started to decline. Like they didn't phone us to say, hey, we're going off the system. Their credit card just would not work. So they either had gone out of business or that credit card was no longer verifiable. So small business, and I think it's going to be true in this environment, is going to get hit, potentially harder and it happens quicker. Enterprises, potentially you have a little longer time to react to it and keep your retention rate up. Generally speaking, the higher you are up, you can keep your retention rate up a little higher. But just understand that as you go through that bottoms up view, there will be certain software that does not make the cut. And if you're not being used, we said at Google the toothbrush test, which is if you don't use the product twice a day, then why do we have it, right? And so if you're not passing the toothbrush test, they're not using it regularly, they're just using it occasionally, then I think you're going to see churn in that environment. So I don't have a number for you, but I do think that gross retention is going to drop. 10 points I think would be a pretty reasonable assumption. If you're at 90, it might be 80. It's also going to be hard to upsell your customers, in this environment. So on the gross retention side or the net retention side, so we're going to upsell a bunch of these customers. That's going to be harder. Some of the portfolio companies I've talked to this week have already said they're getting, the good emails from clients are, we're going to renew, but we refuse to pay any more.
Let me. I think that the big change here is that when we were looking, let's say in the fall at retention numbers, the number one metric we were looking at was net dollar retention. That was the number one metric. I think that the number one metric now is logo retention first. I think that retaining the logo is super important through the downturn because, as Michael mentioned so correctly earlier, it's much easier to sell new products and services to an existing customer where you have a relationship and you understand their business than it is to acquire a new customer. So retaining the logo is going to be very important, much more so. That's the metric I'm going to be looking at as a board member, much more so than the dollar retention and the net retention. I'm actually quite pessimistic about if a company could retain 90% of its logos and comes in at 80% net retention, I think that's a win coming out of the downturn. With the systems in place that we talked about earlier and understanding how their products are being used, that's a huge win. And the reason I'm setting the bar in what might be called too low is that I think that's a reasonable objective based on with the paucity of data that we have today. Two, we need to financially plan prudently, so we shouldn't overestimate the amount of dollars we're going to get from our customer base that we already have. And we also need to maintain the morale of our teams and our people. They need to know that doing what I just said above would be a big win and would be very, very hard. And so one only feels good when one hits the bar in a company. And so I want to set the bar at a place where people can feel like they've been successful. So that's how I would say, but retaining the logo is going to be very important. And I know that you're probably going to want to go, well, how do you do that? And so when you get to that question, I've got some ideas for you.
Well, first, like you're on many boards and have this experience over the years. If a company sent their update, and many of the companies are sending now weekly updates or monthly updates, if we're not having board meetings, and they say, okay, we're expecting to have 90% logo retention and a little bit of expansion, so 101% net dollar retention. Would that strike you as realistic in this environment?
I would say, wow, that's awesome that you feel that. Let's have a meeting to tell me why you think that.
And in that meeting, we'd be going through some of these.
Well, first, first I would want to know, what was the process they've used to come to this conclusion, and then how did they get there? I mean, most companies that, at least that I'm involved with, are run by very smart people, and very reasonable people, but they do have an optimistic lens. Otherwise, they wouldn't get up in the morning and start a new company. They wouldn't join startups if they didn't have an optimistic lens. So, I have faith that they would have used business judgment and appropriate business judgment in putting in. And I'd want to understand how they weighted things to see if it was appropriate. I mean, there are some solutions today that might be even more valuable than they were before. So, for example, if you're selling a fraud solution, that might be higher on, or a hacking solution, that might be higher on people's list today than it was before. We're involved with a company called Resilink, which sells supply chain resiliency software. Well, guess what? Everyone's looking at their supply chain and seeing how resilient it is today. And so their business is doing very well. So it just depends.
I wanted to share an idea a former colleague of mine who's still at IBM gave to me. He said, look, my inbox is full of special offers from all my vendors. And many of us are sending those out. And he said, you can look at the retention, you can look at the open rate for those. If I feel like if my customer doesn't even open my special offer email, I may not be in the top 10. And so that helps me know a little bit where I really stand with that customer if they don't even have time to open my email.
Yeah, so that's a very good one.
On that, kind of getting into what are some of these techniques that we can use to check in with customers to try to understand, we've talked about doing an analysis of them from the outside, maybe looking on Twitter, what are they going through, maybe kind of looking at what industry they're in. What are some of these techniques we can use to engage with people to understand where we might really fit on their list? Are we on that cut list that Michael described?
Yeah.
Go ahead, Michael.
Yeah, I got a few here. First of all, I recommend everybody that they up their level of communications with their clients. So if you were monthly, go weekly. If you were weekly, go twice a week. That's there. This is a time where you want to be communicating with your customers there. But also, you can't just phone them up and say, "Hey, how's it going?" And "Oh, hey, are you going to renew?" What you want while you're communicating with them, you want to be creating value, with them. So again, in past lives, we would do a quarterly business review. Sometimes we would make that a monthly business review. We'd offer more tips and techniques about how to get value from the product, that's there. Another thing I did is since I realized pretty early on in 2008 that I wasn't going to get a lot of upsell, I took things that I was features that I was going to sell to them, and I put them on the included list. So basically, communicate more, but provide value to them. And then the last thing I would say is while you're communicating with them, this is motherhood and apple pie, but it's like you have to listen. So too often we're emailing, we're talking, we're doing like listen to what their challenges are. That will tell you how you can actually provide value on a case-by-case basis. So I would say higher communication levels, provide more value, and more empathy and listening.
Yeah, and this is what Michael says about listening is critical. And as a matter of fact, when we were talking about how important is this for the CEO and the senior executives, this is super important for the CEOs and the senior executives to be on the phone with customers. It's a fantastic time to, one, have the senior executive team reach out, show that empathy with their customers, and two, to directly hear from the customer what's going on with our customer's business. What are the problems they're having? How could we help solve their problems? So having good open-ended questions, which is, what are your business's challenges? What are the top challenges today? Or, what are you having problems with across the board? And then trying to find ways to help them solve that problem, even if it's outside of your own product. Okay? If it's somebody that you can connect them with, that could help them. That would be, that's the mindset to take, is when you're on the phone with them, hopefully, or a Zoom call, which is like a video phone call, like we're doing, is really really be there to solve their problem. First, understand what their problems are. It might have nothing to do with your product. And then two, solve their problems, and build that empathy with them. Now, some other techniques to be used with the conversation once you've gleaned some information from them and you understand what their problems are, is to be creative in how you solve their problems. And I think that there's things that one can take away about, like Michael mentioned, which is, hey, I know that they're not going to be able to spend more money this year in an upsell, so I'll toss in features for free. In one customer's case, we have a company that I'm on the board of. They're talking to one of the largest companies in the world, and they're under what I would call, everyone needs to be a hero by showing that they're not spending money, okay? So one of the things is, we know that this is a very big enterprise, and so we can actually, the company that I'm involved with has a balance sheet, okay, has cash for a couple of years. So they might use this tactic with their customer, which is, okay, we'll give you payment terms, okay, so that you don't have to pay us now. You can pay us in 6 months or 9 months, but we want you to book in. We know you also want to use more of the product. We want you to book in an expansion right now. So here you're saying you're growing the ARR base of this customer, but you're not collecting the cash in the future. And the risk you're taking is very low because the company is a big company with, billions of dollars on their balance sheet. And so really being creative in terms of solving that person's problem is the key here to being able to both retain logos as well as potentially grow your ARR. And it's going to be done on a case-by-case basis. Now, if you have 150 customers, that's pretty easy to do. Now, obviously, if you have 5,000 customers, that's going to be harder to do. And so if you have 5,000 customers, you're going to have to think about programs that people can sign up for.
Speaking about programs, actually, one of the things we've talked about before that I wanted to come back to on this call is this idea of putting resources to use. So we have a lot of customers, or we have some that aren't responding to us. We need to reach all of them. This is the most important thing. We want to know who's going to stay with us, what are they experiencing in their business, what are the dynamics of their company. People don't have time, so we might have to reach out to them multiple times. How can we put the resources of our whole company to work? And I'll give an example. When I was doing Strong Loop, we didn't have an economic downturn, but we had a difficult thing going on in our community, which was the Node.js community. And we wanted to know, how were our customers feeling about this? And how was our user base, some of the, our free level customers who weren't yet paying us, what was their sort of experience with this change? And so what we did was we had all the engineers actually turn into customer support folks for a week. And we armed them with email scripts and call scripts, and people were very uncomfortable. I don't know how to do this. But we said, well, we have to do this. So everybody got 15 or 20 customers, and they had to email and call those people that week. And I remember that this was very difficult. It was uncomfortable for people. At the end of the week, a lot of engineers said, wow, that was really interesting. I did get through to several customers, and the conversation I had with them helped me realize what they were doing with our product, or I made a new friend, or I got 3 more connections on LinkedIn. So that's just one story from my experience. What are some of those other techniques we can use to put resources to work? There's folks right now who may not be as utilized as before.
Yeah, it's good.
But go ahead, Michael.
It's a good lesson, Isaac, there. And it just throws. So the whole company needs to, we talked at the beginning about this being the biggest priority in the company. And so everybody has to gang tackle. And there are pockets of resource that are now less busy in a downturn. So first and foremost, new business salespeople are, have bandwidth, that are now. SDRs, if you have SDRs doing lead generation, it's very hard to get somebody to pick up a phone call. Now I don't, they're not even people are not even at the office. So shifting new business resource to retention makes a huge amount of sense at this time. And sometimes that means you got to change your comp plans and your incentive programs, but that makes that makes a lot of sense to me right now, where you're taking resources out of new business and into retention.
Yeah, I would emphasize that twice. And third is not only are your SDRs, your BDRs and your reps, but also your marketing resources. Your entire marketing resource should be now aimed at the customer base, whether it's event marketing, whether it's content marketing. Everything should be aimed at existing customers. How can they benefit more? And then I do think that doing what you did at your startup is a great idea, which is to have a call-a-thon with the entire company off for a couple of days, doing a call-a-thon and sharing stories with each other. I think it's a great way to build morale. I think it's also a great way to educate everybody in the company about what is the value that we provide? What are the problems that customers have? And you could then tie that into an ideation day afterwards as to what do we need to change to be more important to our customers? What are the things we need to do to be better at so that we can retain our customers more easily? So I think that, once again, the opportunity here of understanding the customers and our products and how they're used throughout the company, what the value is, and then to build the systems and processes so that we can do that on an efficient manner when we're acquiring new customers again, that's the huge opportunity. So we come out of this and we're ready to go and acquire the next $100 million way more profitably than we would have if we didn't have this downturn. And guess what? We'll make a ton more money, equity value with that.
Yeah, that's a good point. Let me jump in and say one thing we've talked around, but we haven't said overtly is executives at the company should get out in front of customers on Zoom and on phone calls. And we've got lazy with that. When times are good, like sales is bringing them in and CS is dealing with them. That's there. But like if you're having your staff meeting and you look around the table, you're the CEO, first of all, you say like, how many customers did you talk to today? How many prospects did you talk to today or this week? What's our goal? And especially if you have very large customers, get your executive team out in front of like, hey, if you got $1 million renewal or $100,000 renewal, like, is there anything more important than for the CEO to do on this day today that actually speak to a customer and make sure that they're going to retain them? I don't think there's anything more important.
I think this is a good example of being able to lead by example. So we want everyone to talk to customers. As the leadership, if you're holding other people accountable to talk to customers, we need to talk to customers too. I'm doing this actually with a company I'm working with right now, and the CEO is interestingly having a little bit of a hard time with it. Hey, we made a plan, good idea. Let's all go talk to customers. We made a list. The CEO is trying to get in touch with people, and I talked to him briefly the other day. He says, a lot of folks aren't really responding to me. I thought, well, that's discouraging, but it's also a really important piece of data that you're learning just right there. If people aren't responding to us, that helps us know how important we are to them. And although that may not be the answer we want right now, that helps us do our plan, because the other part of the job of the CEO is to do the planning. And so if we're looking at, if we have that plan that says 90% gross retention and nobody's calling us back, is that really the right number?
Yeah, and the one thing I would caution is, the time frame for where we're going to take the data set from, in the sense that, I look at, people are freaked out in many places. I know that I am, and my family is, and, we've had a lot of different pressures. And there are also things that are popping up. People might know people that are close to them who are affected by the virus and lots of different issues. So I think that the time frame to collect this data can't be just limited to April and March. You could get discouraging data in April, and that could lead you. So if you get good data in April, that means you're in really good shape. But just because you get bad data in terms of response rates in April, I would wait until you go through it again in May to really assess how important you are. Because you don't want to panic too soon, and you need to set that expectation with your employee base as well, so that they don't panic and their morale doesn't go down. So you don't want everyone just in the dumps because no one's calling them back. We want to set the expectation that, hey, look, we're going to start reaching out to people now because we want to care about them. We want to get out, as you know, everyone's doing it. But you know, we're going to, if we don't reach a lot of people down, don't get discouraged today. You know, we'll reach out to them again in May when things settle down. I think that's pretty important.
You mentioned that people are going through different things, and that even you and your own family, and that's a moment of vulnerability. I observe that this time is a special time because we're all very human to each other. We see each other in our homes. We exchange our worries, and there's something nice about that helps us connect with people, but it's also a little difficult. I know as a startup, you know, I have 10 people, I have 8 people, I have 20 people. I'm working with a bank and I'm trying to always look big. Hey, no, we're a huge company. We're very stable. We're very experienced, and that kind of facade that I'm very well trained to put up is a little in the way of me being real. Any tips for kind of cutting through that a little bit? I think making that human connection right now does feel important, and this is a unique opportunity, but we're kind of used to acting bigger than we really are.
Yeah, I guess the being transparent is important, but I think that in order to get the first few customers, you have to act bigger. But in the sense that, you know, you're also, I think just being transparent and being honest is all you need to do. They know that you're probably a smaller company, and what they care about is really stability, in the sense that you're financed for you know, a good amount of time, and that you have good financiers that are realistic about their expectations of the business this year and aren't going to penalize a growth company for not growing this year, but really being in place to grow the following year. So those are the kinds of stability messages you could give out while being vulnerable, by saying, you know, we are going through a tough time. We are a smaller company, but, you know, we have an understanding board, we have an understanding base of investors, and we're thinking about the assets we need to build for the long term, and we're there to help you. And, you know, and we're here, we're going to use this as an opportunity to figure out how our products can become better, how our services can become better, because guess what? We're not experiencing hypergrowth because no one is going to buy anything. So we're better. We have more resources to better serve you and achieve the successes that you have, that you want to achieve this year.
Yeah, I've got a very, I think, concrete example, Isaac, of being vulnerable in these times. So you know, many of the people that are listening to this are going to get phone calls from their large customers at some point that are going to be, and they might not come from the people you know. They're going to come from procurement, and they're going to say, we need 25% off. We need 50% off. We need to negotiate a very good deal right now. And you know, my advice to people is, like, I mean, these are our customers. We're in long-term partnerships with them, so we want to listen to them. And they, you know, but since we're in a partnership, they want to listen to us. So, you know, when in 01, I was with a small company, and so when the banks were demanding these big price cuts from me, I said, just so it's clear, you're a lot bigger than me, and actually the cash is important to me. So I understand that you need a deal. But let's talk about, maybe I can give you a little bit more service. You know, maybe I can give you a little bit more product. Maybe we can give you a few more users, because you wanted more users. But, you know, being open and honest to say, hey, that keeping the contract value up is quite important to you know, to a small company, and the cash is important to us. And it did get them off the, like when a big company wants to negotiate, you know, a 25% cut, I say, why don't you go see Oracle? Like the real big spend areas. And as long as you're open and honest about it in a transparent way, and you're optimizing for the long term, that worked for me. Knowing that there are things that are important, and if you are an important supplier to them, they're not looking to put you out of business. And yet they may not realize it when they make those big demands that are almost certainly coming.
And so if you take this example, if it's a big company and procurement's calling you, procurement's tasked with a simple metric. Okay, we spent X dollars last year on this set of stuff. You got to bring it in at 0.75x, and then you're a hero. Okay, they don't really care how the stuff is being used, whatever. That's somebody else is using the stuff. They're not using it. So what you need to do is you need to hear the procurement person out. You know what their metrics are. You'll have to grin and bear it, i.e. they're not going to understand your problems. And frankly, in some cases, they might not care about your problems. So maybe some will, but some won't. But then you need to go back to your champion and say, and your users and say, okay, we got this call from procurement. We understand everyone's under a lot of pressure. And this is where it goes, where you're being collaborative with them. You understand why the call from procurement came. You're not going to them and saying, wow, like, I can't believe procurement called me. I can't believe you didn't give me the heads up. You're going to them with the mindset that, of course this happened. Clearly everyone's in crisis management mode, and maybe all the communications channels aren't in place. And you want to have that understanding look is to say, how can we make this a win for you, make this a win for procurement, make this a win for us, knowing that the pie that we have to cut up today is going to be smaller. The pie size is smaller, but how can we make it work for all of our business objectives? So that's Michael said the same thing. I'm just using different words. And it's an opportunity here. The more one can be, the more one can do this well, the better you're setting yourself up for the future. With this customer and also with these people that might go to different companies and buy your products and services again at their next company.
Michael, Ravi, this I think has been full of pragmatic ideas. What are any last concepts or thoughts you have about these difficult times based on your experience in the last downturns or this one, for people to consider as they're trying to work through their churn?
Well, I think that the biggest thing is that we know that it's going to come back. Okay, the world economy and people's buying and all is going to come back. We just don't know exactly how far away that is and how quickly it's going to come back. And so just having that optimism that it's going to come back is going to be very important, and being in the best place with your key assets, cash, product, people, customers, when you come out, and systems and processes. I'd add that when you come out of it is the way to kind of keep focused on it, and setting realistic goals so that we're going to be running much harder. So think of it this way. Suddenly the treadmill went from being flat to now it's at a steep incline of 45 degrees. And we're going to be running faster, but guess what? We're going to cover less ground, and that's okay. And that if we can cover that ground, it's a win. And so keeping that always in mind, knowing what that ground really is, given how hard it is, so you set the right goalposts.
Yeah, and I think my final comments are just maybe a rehash of what Ravi and I have said, is that the most important thing you do is make this the number one priority within the company and get everybody rallied around it, from engineering through product. It is not just a CS problem. It's not a sales problem. It's not a marketing problem, but make it the number one priority. If you can prove this, if in what looks like it's going to turn out to be a very severe downturn, that you can keep your customers, you're essentially proving the most important thing to your investors, which is people like your product and they need it. And if you can get through that, you will be stronger on the other side. So make it your number one priority.
I agree.
Thanks,
Number
guys.
one.
This would be great. So if anyone's interested in finding out about number 2, 3, and 4, I think we're going to do this again and talk about some of the other issues that companies are facing right now, and ideas for how to work through that. Thanks for watching, and catch us on our blog on shastaventures.com.